What if you got your hands on a secret document, a memo outlining a plan so huge, so audacious, that it could just break the entire precious metals market? Well, that is the extraordinary claim we are diving in today, and it's all based on one supposedly leaked internal document. And this is the line that kicks the whole thing off. The source claims to have a 10-page memo, not just a rumor, but a specific document with a specific date, and it allegedly details a massive, coordinated buyout of physical silver. So what kind of money are we talking about here? $89 billion. Now, to put that number into perspective for you, that's more than the entire annual economic output of countries like Croatia, all allegedly aimed at one single commodity. And what does this memo supposedly lay out? A plan to snap up 50 million ounces of physical silver. But it's the timeline that's truly wild. They're supposedly giving themselves just 90 days to do it, with the whole operation kicking off on Monday, January 6, 2026. Now, before we get any further, we need to be clear about who the alleged buyers are. We are talking about sovereign wealth funds. These are not your typical investors, okay? These are state-owned funds, backed by nations, with literally trillions of dollars at their disposal. Their goal is long-term generational wealth, and when they decide to make a move, they move with incredible force. So, which nations are we talking about? The memo allegedly points the finger at two of the most powerful sovereign wealth funds on the entire planet. Let's take a look at who they are. On one side, you have Norway's government pension fund Global. It's the biggest in the world. We're talking $1.6 trillion in assets. And it's known for being pretty conservative and diversified. Then you've got the other player, Saudi Arabia's Public Investment Fund. This is a $900 billion behemoth known for making huge, aggressive, opportunistic bets. So you've got two completely different styles supposedly teaming up for one giant purchase. And the scale of this alleged partnership is just immense. The total $89 billion is split almost perfectly down the middle, $45 billion from Norway, $44 billion from Saudi Arabia. You know, a split that close, it doesn't really suggest a coincidence. It screams coordination. Which, of course, brings us to the biggest question of all. Why? Why would two of the world's biggest funds make such a crazy, urgent move into physical silver right now, of all times? Well, the memo apparently lays it all out. So the memo allegedly points to a perfect storm of reasons that both funds agree on. You've got the classic arguments for silver, right? Protecting against inflation, diversifying away from stocks. Then you've got the modern angle, huge industrial demand from electric vehicles and solar panels, plus the classic geopolitical hedge. But the real kicker, the thing that supposedly lit the fire, is a new Chinese export ban that they believe will pull hundreds of millions of ounces off the market, creating a massive supply crisis. But for Saudi Arabia, the source claims there's even more to the story. This isn't just about silver as an investment, it's a huge strategic pivot. They're allegedly trading their number one energy commodity, oil, for a critical component of the new energy economy, silver. And it's also seen as a move that aligns them with the goals of the BRICS nations, which are openly exploring commodity-backed currencies. Okay, so you've got the who and the why. But what about the how? I mean, how on earth would you even try to buy 50 million ounces of physical silver without just completely blowing up the market from day one? Let's get into the alleged game plan. The plan is described as nothing short of a multi-pronged assault. The contracted banks would first hit the COMEX futures market, standing for delivery to literally drain the vaults. At the exact same time, they'd be going to every major bullion dealer on the planet to buy out their entire inventory. They'd also make offers directly to miners and sweep up everything on the secondary markets. And finally, they'd redeem huge blocks of ETF shares for the physical metal. It's an all-out blitz on every corner of the market. But here's the catch, a problem that the memo itself supposedly admits. Even with this incredibly aggressive strategy, they project a massive potential shortfall. The order is for 50 million ounces, but they estimate they'll only be able to get their hands on maybe 25 to 38 million ounces through all those channels in their 90-day window. So what happens then? What's the contingency plan? What do you do when the biggest money in the world places an order that simply can't be filled at today's prices? Well, this is where the strategy supposedly gets really aggressive. According to the source, the memo gives the banks authorization to seriously escalate their bids. Now remember, silver's trading around $30 an ounce right now. The first authorization level Pay up to $150 an ounce. That's 5 times the current market price. And this isn't a suggestion, it's a green light to get the metal whatever the cost. And what if 5 times the market price still isn't enough to shake the silver loose? The memo allegedly authorizes a second, even higher level, up to $250 per ounce. The key takeaway here is that these buyers are described as being supply sensitive, not price sensitive. They need the physical metal, and they're apparently willing to pay absolutely anything to get it. Now, you can imagine if a buying program of this size were to actually happen, with that kind of indifference to price, the shockwave through the market would be, well, seismic. So let's look at the aftermath the source predicts based on the memo's contents. The source lays out a timeline of just immediate chaos. By Wednesday of the first week, bullion dealers are reporting they're completely sold out. By Friday, the COMEX price has blown past $100. And by the end of week 2, as the buying just keeps going, the price is already pushing towards $130 an ounce. And the long-term impacts are predicted to be even more dramatic. This buying spree would supposedly drain the COMEX vaults, which could cause a total collapse of the paper market. It would spark a supply crisis for all the industries that need silver, trigger absolute panic buying from the general public, and ultimately lead to major geopolitical tensions as nations scramble over this newly strategic resource. This one quote from the source's analysis of the memo, it really sums up the whole alleged mindset. The document supposedly knows that this plan will cause a massive disruption, that it will break the market, but that's just framed as an acceptable consequence for achieving their goal. And that really leaves us with one final and I think critical question. Whether this specific memo is real or not, it forces us to think about a pretty powerful idea. What actually happens when that kind of sovereign-level capital decides that price is no object, and a physical asset must be acquired, no matter what the cost is to the market?